So good evening everyone once again, and welcome to our amendment session for 2025 May examination. So what I have done here is that I have consolidated all the amendments that has happened after your previous exam, which is Jan exam, which also means that I have consolidated amendments which is relevant for your exam. There are so many circulars that has come, and not every circular has been part of your amendment syllabus by ICAI. So I have picked up what is relevant and what I think you should be covering and which is more likely to be tested here. So I also have given you examples in this material. So in this session, we're going to go through questions as well. It's not just an amendment consolidation. I'll take you through some example questions so that when the main question comes in, okay, maybe these things can be there in the examination. So probably, if you sit here, attend this entire, probably 120 minutes of this session, there is a very likely chance that you're going to score 10 marks directly from this session. So ensure that you keep focused and then stay throughout the session. You might have already understood some amendments. You would have already gone through the amendments while I was taking some regular classes or whatever regular classes you have taken. However, having a consolidated amendments increases the chance of you scoring high. And there is always the pattern that if you look at in all your previous examination, whatever questions that I have gone through, in the first compulsory question itself or in the case study MCQs itself, they pick one of these amendments and then put it across. So it is always good to see an amendment which you have just referred, all right, right before the examination. If you refer this PDF, it's always good to have these amendments in your examination right when you open up your question paper. That's the objective in which we are trying to cover and then take you through this session. So I'm starting with each chapter wise so that it will be a little more easy for you to cover. So some chapter amendments has multiple implications, and I'll also tell you how that can be tested in the examination. All right. Okay. So the first amendment that we have is from charge chapter. Right. I have already given a session on my YouTube on how to approach for your GST paper for this examination. Around 18-19 minutes YouTube video is there on my YouTube channel, which is something that I'll totally recommend all of you to go through in case you have some confusion on how to prepare for your examination. Can be used for even September exam or whatever exam that you are writing. Anyway, so looking into the charge chapter, there are two major amendments that you need to refer for charge chapter for this examination. One is a very small amendment. Second one is a little more implication is there. They can ask you a question consolidated. So when I'm putting you through amendments, I did not just give you the amendment, okay, this is what is amended. I'm also trying to give you an overall understanding of the entire area so that you get, if you get a question relating to the amendment, you will be able to write it entirely. The first amendment is on a reverse charge case. They have inserted an additional entry on reverse charge and said, when there is an unregistered person renting a commercial property to a registered person, that registered person will be liable to pay tax under reverse charge mechanism. So I have listed it. You can see it on the screen. I have listed it here. RCM on renting of commercial property to a registered person by an unregistered person. Now, what is this renting of immobile property? What I want you to do is that if at all you are referring renting of immobile property, there could be multiple questions that can come in your exam. So what I've done is I've given you the entire summary chart that you have to go through for your examination this time. So if you look at renting of immobile property, there is a separate RCM provision which is covered for government when they are renting an immobile property. Okay, government could be registered or unregistered, doesn't matter, but if government is renting, there is a separate provision that is available. Then you have commercial property renting, you have residential property renting, and for residential property there is some exemption available. Some cases it is taxed under RCM. So what I've done is I've consolidated everything. I'll tell you how to go through this chart. This is only one chart that is required for all the questions that are on renting of immobile property. If at all you're somebody who is learning how to analyze the GST impact of renting of immobile property, take only one chart, and this chart gives you 360-degree understanding of every type of renting. And whatever question comes in, if you know this chart, just close your eyes, and if you're getting this chart in your head, you will be able to answer. So for the purpose of this understanding, I have classified the property into commercial and residential. And if the property is a commercial property, the next point that you should remember for your exam is it is always taxable. Okay, so the question talks about a commercial building is rented by Mr. Raju to somebody. then you should understand it will be taxable. Okay, I have written an asterisk mark. There's only one very specific case where it will not become taxable, which is like very unlikely to happen. So a commercial property would be always taxable. Then what is the question? The moment it is taxable, we ask the question whether it will be under FCM or it will be under RCM. That's all the question that we are trying to answer. Then to understand whether it's under FCM or RCM, we ask the next question, which is what is the supplier category? Okay, so look at, I have given two type of supplier category on what property? Commercial property. I said the supplier could be government, but other than Indian Railway, or it could be local authority. It could be a parliament building that is being rented out, like say to run a canteen or a grocery shop inside parliament building, it could be rented out. It could be a state legislative assembly building that is rented out, or if it is a building inside court or tribunal that is rented out. Then we have to ask the next question, to whom it is rented out. Then we will ask, okay, what is the recipient category? So if the supplier is government other than Indian Railway, local authority, parliament, state legislative assembly, court or tribunal, if they are renting commercial property to a registered person, then that registered person would pay tax under reverse charge mechanism. Now the same property is given to an unregistered person, and I told you that the moment you hear the term commercial property, you should think that it is taxable. Now if the government has given a property, government has a shopping center inside one of those public facility. Government of Kerala has given this shopping center to someone, right? They have given this shopping center to an educational institution, but they do not have a GST number. Okay, they don't have a GST number, they're a small entity. Then would it be still taxable? Yes, it would be taxable under FCM, which means if the rent is 20,000, they will pay 20,000 plus GST to the government department. Government department will pay under FCM to the GST department. However, if it is given on rent to a registered person, say on the government facility, Infosys has a building. Infosys has taken a building on rent in the government facility. Now the government is only going to collect the rent. Say the rent is 5 lakh. Infosys would pay the GST under reverse charge. That's the RCM case we have. I hope this is clear. Now, suppose the commercial property, now the supplier category is not government, it is other than government. Then we have to ask the question, who's the supplier? If the supplier is a registered person, which means the one who is owning this commercial building has a GST number, including Indian Railway. Even though if they are government, they will come under this other category. To any recipient, registered or unregistered, will always be taxed under FCM. Right? That's very common. Lulu shopping mall in Kochi. Lulu hypermarket is there. There are a lot of shops that is inside this shopping mall. Phoenix Mall in Chennai. There are a lot of shops inside it. And the supplier is definitely having a GST number. So it will be taxed under FCM only. Then what is amendment? They said, government said, in that case, I could get GST only when the supplier is registered. Now the government is thinking about a possibility wherein there is a commercial building. Probably that commercial building is earning only 1 lakh of rent. So on an annual basis, they will earn a rent of 12 lakh. Now 20 lakh is the registration threshold limit. So this commercial property owner could be somebody who is not registered under GST. Now the government is thinking, is there any still ways in which I can collect GST in these cases? That the government understood, if the recipient who is taking this building on rent from an unregistered person, if they are registered, I can get it from the recipient. So they have added an additional entry there where they said an unregistered person giving commercial building to a registered recipient would be now taxed under RCM. That's your amendment, can be tested in your exam. So then what kind of commercial renting would still not be taxable? The commercial renting would not be taxable if the supplier is unregistered and recipient is also unregistered. So I have written an asterisk mark and I have written that understanding here. Look at it. Renting of commercial property by unregistered supplier to unregistered recipient will still not be taxable. Is it clear to all of you? Can I have a quick yes if this is clear on the chat box, everyone? Right. There is one more commercial renting that could be exempted. What is this commercial renting exempted? If you have learned, I am consolidating something else also, okay, so that you get a 360-degree understanding. If you have learned exemption in GST, there is a provision which says that if there is a place which is inside the precincts of a religious place. Okay, so renting of a place which is meant for public, or it's a place inside religious, it's inside the precincts of the religious place. okay, inside the surrounding of religious place, if it is rented out by a religious entity, then there is an exemption within a limit. If they are giving a room, it should be less than 1000 per day. If it's an open area, Kalyana Mandapam, community hall, it should be less than 10,000 per day. If it is a commercial property, see, a religious place having a commercial property inside that. Say if you go to a temple, if you go to a mosque, you could find some commercial spaces around it. They might be selling some chains, which is some kind of a monuments of the god deity, some kind of artifact. They will sell all this. These are commercial spaces. Sometimes this is owned by the religious place. There is an exemption for that commercial renting, provided the monthly rent is less than 10,000 per month. That also can be clubbed with this and then learnt. That's all about commercial renting. Now the structure of residential property renting is slightly different. If you look at residential property renting, it is not always taxable. There are some cases where residential property renting is exempted. Now, how will you understand the GST impact of residential property renting? They said, ask who's the supplier. Now, the supplier can be any person. It could be a registered person or an unregistered person. Now, we have to ask the next question. What is the category of recipient? Now, when I say supplier could be registered or unregistered, in the sense, I'm a sole proprietor. Say, for example, I'm a sole proprietor. I have a lot of businesses. I also, whenever I get some savings from businesses, I invest in a flat. This apartment or a house or a flat is considered to be what property? Residential property. Say I have 5 apartments in Bangalore. I rented all the 5 apartments. Can I say it will be always taxable? I have a GST number. Not necessarily, because residential property, if it is rented to an unregistered person, so supplier could be registered or unregistered, anybody could own this residential property. If they are renting this residential property to an unregistered person, then GST is exempted. Now, this residential property is given to a registered person, it would be taxable, but it would be taxable under reverse charge mechanism. Are you guys understanding this? Which also means that, say, I have a flat. I have given this flat to Unacademy. Why did Unacademy take a flat on rent? They are going to claim these expenses as their business expense because they are going to put their faculties to stay in this apartment. Federal Bank is taking a house on rent for their manager to stay. So this property is a residential property, but it is given to whom? A registered person. Now they are saying that in that cases, the registered person will end up paying tax under reverse charge mechanism. Are you guys understanding this? Now there is an additional problem here. What is this additional problem that we have? What if, say, I'm a sole proprietor. I have taken this property on rent. I have taken this property on rent for my family to stay. Do I have a GST number? Yes. What property am I taking on rent? Residential property. I have taken a house on rent for my family to stay. Is it my business expense? No. But am I a registered person taking this residential property on rent? Yes. Would it be taxed under RCM? No. Look at the clarificatory circular they have given. They said renting of residential property, you can read it on the screen. Renting of residential property to a registered person being a sole proprietor. There could be a confusion. We might have a GST number. But if he is not using this property for his business, if he has taken the property for personal purpose, it will be still considered to be exempt. You don't have to apply the RCM part. This is the clarification that we have. So, you should not learn this commercial property renting amendment standalone. You should run it together with this particular entire chart. Are you able to understand the chart? If so, can I have a quick yes on the chat box, everyone? Please, let's have an interaction. Confirm me on your understanding so that it will be a little more easy for me to go ahead from there. Okay, perfect. Thank you, guys. Then, look at the second amendment that we have. This is on composition levy scheme. I have written it as a single line amendment. It's not very important. Now, if you are somebody who's under composition levy scheme, you will make GST payment on a quarterly basis, right? Every year, you will have 4 payments that is being made. So, first quarter in a financial year, April, May, June, you will make the payment of GST to the government on or before 18th of subsequent month. While you make this, you will not fill any returns. You will only fill a payment form called a CMP 08. Now, whenever somebody is registered, they will have to go give the details of their turnover, give the GST liability details to the government. What will be the method in which these details are given? These are given through returns. Now, the return that is applicable for a composition levy scheme opted person is a return called as GSTR4. GSTR4 used to be filed on or before 30th of April next month. Now they have extended this timeline. They said from 24-25 onwards, from last year onwards, the due date of filing your GSTR4, which we can call it as a financial year return, because you just have one return to be filed if you are under composition levy scheme in a year, called GSTR4. This return, now the new deadline would be 30th of June instead of 30th of April. Is it clear? A very simple extension of due date for filing GSTR4. I hope this is clear to you, right? Now let's move to another chapter and the amendments that is applicable for May exam from that chapter, which is exemption. I've picked up the important one that would be tested in your examination. So the first one is that the changes that we have on Ministry of Railways, right? They have introduced some additional amendments after Ministry of Railways were now see from last year onwards, Ministry of Railways is entirely moved into FCM regime, which means that Indian Railway, whenever they provide a services, if at all it is taxable, it is going to be taxable under forward charge, including Indian Railway renting immobile property. I have told you in the earlier discussion, Indian Railway, if they are renting immobile property, it would be taxed under FCM. So Indian Railway will collect, Indian Railway will rent immobile property, yes. All the railway station has so many shops, no, it's all places owned by Indian Railway rented to somebody, commercial renting. It will all be taxed under FCM is the understanding. Now, I have summarized your learning for Ministry of Railways for your examination here. Look at, I have written it as point by point for you to understand this. Point number 1. All taxable services. Why am I putting it as taxable services? Because some services of Indian Railways are still exempted. Wherever Indian Railway services are taxable, all taxable services of Ministry of Railways will be taxed under FCM, irrespective of a recipient being a business entity or not. So all the services are now under FCM. You keep it in your understanding. You think about all the services by Indian Railway, like say advertisement services, service of renting of immobile property, services in terms of some transportation. All of these services are going to be taxed under FCM. Then point number 2. Look at it. Renting of immobile property by Ministry of Railways is also taxable under FCM, irrespective of recipient being registered or unregistered. Why did they put this point? Because since that is government, we used to make an understanding of whether it is registered or unregistered, and that's all our decision making. That is also gone. Then, third one, there are some exemption that is available for Indian Railway services. What is the most popular services that we remember Indian Railway for? Which is transportation, right? You and I, both of us use a lot of transportation using Indian Railway. Now, in Indian Railway transportation services, we have different coaches, and not all coaches are subject to GST if you book your tickets in. Only two coaches, only two type of tickets are taxable, which is one is air conditioned tickets, which is 3-tier AC, 2-tier AC, first class AC. Now you have Vande Bharat, which has chair car and executive chair car. All of these are air conditioned. It will be taxable. Your ticket will have 5% GST applicable. Similarly, if it's a first class ticket, you will have GST applicable. There are non-AC trains, first class is still going on. So all of them would be taxable, which also means that all other tickets would be exempted. What are the other tickets? Second sitting, general ticket, ladies ticket, sleeper tickets, all of these are non-AC would be exempted. Then, so wherever it is taxable, and it will be taxable under FCM. So which means that if you book an AC ticket, you will pay GST to Indian Railway under FCM, and Indian Railway will pay to the GST department. Then next point, in transportation of goods, if you look at here, some goods if you transport, that is also going to be exempted, and I have a code word for that. It's called random 5. Okay, now random 5 is something that I use it in the classes. So for those people who are not coming from my classes, these products stands for If you're from my classes, you should be ideally typing it on the chat box so that others would understand this. It includes these product, which is relief material, agriculture produce, newspapers and magazine, defense and military equipments, organic manure like cow dung and compost and all that. Okay, organic manure. M5 has milk, salt, food grain, including flour, and pulses and rice. So if you transport these product, right, if you transport these product by Indian Railway, that will also be exempted. So we call this as random 5. I'll repeat it once again to get your understanding. R stands for relief material, A for agriculture produce, N for newspapers and magazines, D for defense and military equipments, O for organic manure, M5 is milk, salt, food grain including flour, pulses and rice. If you transport these goods by Indian Railway, it would be exempted. All other transportation of goods would be taxable under FCA. Now, for your May examination, you have additional exemption that is available for few more tickets. So we talked about non-AC ticket, but there are few more other services that we avail as passengers from Indian Railway. That is also exempted like this. Look at the additional exemption. Platform ticket. If you're not traveling but you still want to enter to the Indian Railway platforms, you will have to take something called as a platform ticket. Now the platform tickets are also now exempted. That's a new exemption that is available. Now if you're waiting there in Indian Railways stations, you have air conditioned and non-air conditioned waiting rooms that you can use, and mostly air conditioned waiting rooms are chargeable for you. Per hour you'll have to pay some charges. These are also going to be exempted, no taxes on that. Cloakroom facility. What is a cloakroom facility? You want to keep the luggages. Whatever charges you pay for cloakroom is also going to be exempted. Battery operated car services. That golf kind of small electric cars are there in Chennai Central and similar railway stations where you can pay 150 rupees. They will take you to a specific platform with your luggage. That service is also going to be exempted. There are 4 additional exemptions available. Then there are 2 more exemptions which is little tricky for generally all the students to understand. What is the next one? Service provided between various zones or divisions inside Indian Railway is also exempted. Now if you look at Indian Railway has different zones. You would have already heard about this kind of zones in terms of while you're booking your Indian Railway, they might even announce sometimes that welcome to Southern Railway, okay, Northern Railway, Central Railway. So you have different zones separated in your GSTs. One zone might provide services to another zone whenever required. The services between the zones would also be exempted from GST. Then services provided by SPV, special purpose vehicle, to Indian Railway by way of use of infrastructure facility built by SPV for a consideration, and maintenance services provided by Indian Railway to SPV are exempted. So we are talking about an exchange program between SPV and Indian Railway. There is an exemption available. Now this is something that you might not be able to understand on the first go. What I will do is that for this alone I will give you an example to comprehend this particular point. I'm taking an example that I have written in the classes. Look at this. Say, Indian Railway wants to construct a new railway station. Where they are constructing a new railway station? They're constructing in Bangalore. You must have heard that Bangalore has a place where there are so many IT companies which are called as electronic city. Okay. In electronic city, the Indian Railway decided to extend their railway station there and then built a new railway station called an electronic city station. Example only, okay. Indian Railway has no such plan. Now, Indian Railway would require 100 crore budget to build this electronic city railway station. Now, the problem with this 100 crore budget is that it needs to be allocated from Indian Railway's existing budget. Now, is there Indian Railways exploring the possibility that is there any other ways in which Indian Railway will be able to do this electronic city station but not spend so much of amount? Now, one model that is very common to build railway stations are something called as PPP model, public private partnership model. How that will be generally done is that Indian Railway will go and then tie up with some other private party. Here, in example, I have taken as Prestige Group. And Indian Railway is putting 50 crore. And Prestige Group is saying that if Indian Railway put 50 crores, Prestige Group will construct, because they are a construction company, they will construct this electronic city station free of cost. Anything, no, nothing extra amount needs to be paid, no 100 crore. Instead, what they will do, the Indian Railway puts 50 crore, Prestige Group will do the construction for 50 crores and will not charge anything extra from their end. Instead, Indian Railway and Prestige Group put together will start an additional entity called as Electronic City Corporation, which will be owning this railway station once the construction is over. So this is called as PPP model, where private and public partnership is there and there is a new entity, SPV, special purpose vehicle, which is a term that we use for a new entity to do a specific job. So they are constructing this particular building. And what happens after constructing this building? This is not owned by Indian Railway, it is owned by an SPV. Now SPV will write a contract with Indian Railway, wherein Indian Railway is going to use this building for next 10 years. And each time when they are using this particular railway station, they are going to pay a monthly fee to SPV. And this monthly fee will be taken out by both central government and Prestige Group as dividend. After 10 years, what happens? This particular railway station would be transferred back to Indian Railway. So Indian Railway is paying this over 10 years and the construction is completed 10 years before, and Indian Railway is able to use without spending so much of money. After 10 years, after paying all this money, they will get this railway station to their name itself. This is the model that they have. So what happens? Indian Railway, there are two services that happens here. Indian Railway, what they are doing, they are getting the service from SPV. What is the service they are getting? Permitting Indian Railway to use this particular building, like renting of building, very similar to that. It's mostly a concessionaire contract, wherein they will get this particular building to use, not outrightly renting. It's kind of a different contract that they have. But Indian Railway is paying a monthly fee to get this, to use this particular building. Now, this building is still owned by SPV. So SPV is supposed to do the maintenance of the building. If some structure needs to be changed, some maintenance needs to be done, it's all to be done by SPV. Now SPV is not having so much of access to the building. They don't want to look at this on a daily basis. So Indian Railway, what they do is that they provide the service to SPV in terms of maintenance of this building. So we can say in a contract like this, okay, an exchange program by government or Indian Railway, there are two services that happens. What are the two services that happens? Look at it here. First, service number 1, that is done by whom? SPV. To whom it is given? To Indian Railway. What is that? SPV gets a monthly fee. Would it be taxable or exempt? It would be exempt under GST. What is the second service? It is provided by Indian Railway. What is the service? Maintenance of this particular railway station or particular building. And who's getting the service? SPV. And whatever SPV is paying to Indian Railway, would it be taxable or exempt? That will also be exempt. This is your understanding of the wordings of exemption that is given on exchange program. Now let's read this exemption once again for your better clarity. Service provided by SPV, special purpose vehicle, to Indian Railway by way of use of infrastructure facility built by SPV for a consideration, and maintenance services by Indian Railway to SPV are exempt. So there are two services. One is to Indian Railway, second is by Indian Railway to SPV. Both of them are exempt. Are you guys understanding this exemption? Can I have a quick yes if this is clear to you? All right. That's good. Let's move to the next exemption that I wanted to clarify for you. It was a long demand after the hostel accommodations. There was always a confusion whether hostel accommodations are taxable under GST or not. Why there was a confusion is because a couple of years back, the exemption that was available to hotel accommodation, there was an exemption long back where you book the hotel room for less than 1000 rupees, there was no GST. Today, that exemption is not available. So, hotel room if you book for 10 rupees, 100 rupees, 500 rupees or 1000 rupees or 10,000 rupees, it will always be taxable. The tax rate alone would change. So, it is always taxable in terms of hotel accommodation. Then there's this question that we had, is there any exemption available for hostel accommodation? And at some point there was a clarification that was sought from the GST Council, and there was so much of request asking, because hostels are being used by students, there should be some kind of an exemption that is available for hostel accommodation. Now the GST Council has heard the plea and they came up with an exemption with certain condition. What is this condition? They said service by way of accommodation where value of service is less than or equal to 20,000 per person per month. If it's a hostel and you charge how much? 20,000 per person per month or less, will be exempted, provided the period of accommodation is for a continuous period of 90 days. So, it should not be hotel wherein you are staying for 1 day, 2 day, up to minimum 90 days. They are saying that minimum, okay, 90 days and above. 90 days, it could be 100 days, could be 200 days, but if you take it for only 30 days, you will not get exemption. So, this exemption will be a benefit that will be available to hostel, because generally people take hostel for more than 90 days, and hostel accommodation where the accommodation charges are less than or equal to 20,000 would be exempt. Now, what if the hostel is charging 25,000? It's a luxury hostel, there is an air conditioning and all that. Would it be per person? Huh? Per person, 25,000. Would it be taxable or exempt? It would be taxable. How much would be taxable? Entire 25,000, not 5,000. It will be fully taxable. That's how GST exemption is interpreted. Is this clear to all of you? Can I have a quick yes on the chat box? There is a clarificatory circular that has come which says that you heard of an entity called RERA. Okay, RERA is expanded as Real Estate Regulatory Authority. What is the expansion of RERA? It is Real Estate Regulatory Authority. There was a confusion. There is an additional exemption entry. So, it's just a clarificatory circular that we have on an exemption, existing exemption. There is an exemption that says that services provided by government authority. What is a government authority? These are entities. These are entities which are constituted by government, either by an act passed in the parliament, and at least 90% is held with government. Okay, so this is how we define government authority, and the government authorities are generally constituted to do the functions under 243G or 243W of panchayat or municipality, like urban planning, waste management, sanitation, etc. So, services provided by government authority used to be exempted. Then there was this question whether RERA, Real Estate Regulatory Authority, can be considered as a government authority, and the services. So, whenever there is an apartment project that is happening, Skyline Builders, DLF Builders, Tata Constructions, whenever they are planning a new construction of building, to ensure that these people are there, once they start the construction, they are going to use the funds of the customer to do the construction. What if the construction gets incomplete, and what if it is getting stalled halfway? Now, to avoid this scenario, the government has set up a RERA and asked every construction project to get registered under RERA. Whenever there is a construction project that is getting registration under RERA, there will be a registration charges. So, the next question, would this registration charges be taxable or would it be exempted? So, you can look at here. Real Estate Regulatory Authority is considered as a government authority. Therefore, their activities are covered under Constitutional Article 243GW and their statutory collections would be exempt because the service provided by government authorities are exempt. Are you guys understanding? Simple point that they have clarified. Then insurance exemption is what I'm going to talk about. So insurance exemption is not very easy to understand because it has a lot of preface to understand. I'm only going to talk about the amendment because that's what is important for me. And I'm taking this amendment even though it is not generally tested in the exam, because there is a new term that you have to understand here, and if at all this term comes in the examination, if you have not gone through this amendment, it could be a little confusing one for you. Reinsurance of government schemes are exempted. Government schemes are generally exempted if it is insurance itself. Normally, there are two types of insurance. One is general insurance, life insurance. Anything other than life insurance is called as general insurance. Normally, there is GST on insurance premium. You take an LIC insurance, SBI life insurance. You take a car insurance from Acco insurance. You have to pay GST on the premium. However, there are some government schemes like Pradhan Mantri Bima Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana. That's the full name of this particular scheme. This is a government insurance scheme. That premium will not be subject to GST. Now, government can actually take reinsurance on this premium. What is the meaning of reinsurance? Say, government does not know how to run insurance schemes, but government is collecting insurance premium. But if somebody is claiming government do not want to be in trouble, what they will do? They will take an insurance on another insurance company. Say, I am government, I am giving you insurance. Okay, I am saying that 5 lakh protection I will give you as government. And I have collected premium of 100 rupees. I did not charge any GST. Now, I don't want to be in trouble because I don't know how to arrange this 5 lakh. What I have done, I went to Oriental Insurance or I went to LIC and saying that, see, I want to give 5 lakh rupees to that person. Can you issue an insurance? LIC said, I'll charge 1000 rupees. So, no problem. I will pay you 1000 rupees and I'll take this insurance. So, this is called reinsurance. Reinsurance of government schemes, the premium would be exempted. So, whatever premium paid by government to reinsurance government schemes would be exempted. Now, LIC is again reinsuring this particular scheme to some other insurance company. It's called retrocession. That would also be exempted. So, primarily, an exempted insurance scheme, their reinsurance and reinsurance of reinsurance, which is called retrocession, that's also going to be exempted. Okay, so let's move to the next exemption that is available. Okay, so let's move to the next exemption that's available, which is on affiliation services. There are two things that I've consolidated in your summary note that I've given here. One is the service of affiliation, which is covered by a new additional exemption entry. Number two, there is a clarificatory circular after this exemption that was inserted. Now, let me first give you an understanding of what is an affiliation service. Say you're a school or you're starting in a college. You cannot go out and then start offering courses without an affiliation with another board or university. To give an example, you are starting an LP school. You need to have some syllabus that is given to the students. So you can either go out and then get, state syllabus, or you can get NCERT, which is national syllabus, or an international syllabus, something. To get this, you have to satisfy their criteria. Like, say for example, the school should have these many facilities, then only they will give you this affiliation. What is the benefit of getting affiliation? Once you get an affiliation from NCERT, you can actually go for CBSE, say we call it, right? You can get a CBSE affiliation. So central board is giving you affiliation for education. Then you will be able to offer them CBSE courses. If you are going and then getting affiliation from state board, then you will be providing them state syllabus likewise. So every school would go and do that. Now, to get this affiliation, you will have to pay a fee to CBSE. You have to pay a fee to your state board. Are these fees taxable or not? They said affiliation service has no specific exemption. So, affiliation services are taxable is your first clarification. Then on top of it, government came and then notified an additional exemption and said only one case affiliation services would be exempted when it is provided to a government school. So, a Kerala government school is getting affiliation from state board and that school is paying 1 lakh rupees for that. Would it be taxable or exempt? It would be exempt. However, a college is getting admission from an affiliation services from Bhartiyar University or Madras University or MG University or some universities, Central University. They are getting affiliation. Would it be taxable or exempt? Taxable. Only government school affiliation charges would be exempted. This is the additional understanding. So they clarified that all other affiliation, private schools and colleges, university affiliation, everything would be taxable. Is it clear? Can I have a quick yes? Next one. This also needs to be clubbed with some other understanding that you need to have. So it will become better learning for you, which is services which are, I'll read the exemption first on the screen, then we can discuss that in detail. Services which are incidental and ancillary to transmission or distribution of electricity like meter rent, installation, shifting charges, including duplicate bill charges are exempted. Now I'll give you an overall understanding if you don't know from the segment of electricity. A company, there are thermal power plant, hydro plants, etc., which is manufacturing electricity. Electricity in GST is considered to be supply of goods. So when a company is manufacturing electricity, you should understand that it is considered as supply of goods. But this generating electricity is exempt goods, but you don't have exemption of goods. That is part of your syllabus. That's why you don't learn about generating electricity. So there are two type of companies in electricity industry. One is generating electricity, another one is transmission of electricity. So all the government utilities are doing transmission of electricity. So generating electricity is goods, exempt goods. Transmission, after transmission of electricity, TNEB, Tamil Nadu Electricity Board, KSEB, Kerala State Electricity Board, all of these boards are giving you bills and they will have electricity charges or energy charges. These are considered to be supply of service. Transmission or distribution of electricity is considered to be supply of service. The next question is that would that be taxable or exempt? That is also exempt. So manufacturing or generation of electricity is exempt, transmission is exempt. Apart from that, in your electricity bill, you might find other charges, like say for example, first time you are applying for an electricity connection, the electricity board would charge you additionally something called as installation charges. If you're shifting your EB connection from one place to another, there will be shifting charges. Occasionally there is something called as meter rent that is charged. If you want to get a duplicate bill for your submission somewhere in government cases, there will be a charge for that. All of this used to be taxable, now they have specifically exempted. Very simple case to understand, right? I hope this is clear. So you can say your entire electricity bill would be exempt from GST now. Okay, so your entire, like your energy charges, the electricity charges are exempted, your duplicate bill charges are exempted, meter rent is exempted, there is no GST on anything that is being applied. That is the memory that you can keep. Next one, I am moving to the next chapter where I am discussing a very important amendment which very highly going to be tested in your examination. Okay, so this is on time limit for availing ITC. So what I'll do is that first I'll give you the existing provision and then tell you what is the need for this additional provision that we have. So the amendment that we have in time limit for availing ITC is that They have introduced in the Second Finance Act 2024 from 1st July 2017. It's a retrospective amendment which is applicable from May exam onwards. They have introduced an additional 2 sections which gives you an extended time limit for claiming ITC. Apart from your 16 for time limit we have as existing, there's an additional time limit that is given in 16.5 and 16.6. What is 16.4 time limit was talking about? So I'll give you an understanding of the existing time limit so that you have a better understanding of the overall provision. I'll quickly summarize few provisions so that anybody who is like listening this for the first time would not feel very much like out of context. There are 2 words that is very important in GST. One is availing ITC, another one is utilizing ITC. What do you mean by availing ITC? Every month after you have so much of inwards apply, whatever is eligible for you to take as input tax credit, you have to put that amount under in your return called GST R3B in the respective table and claim this. The moment you file your 3B and then claim this credit, it will be credited to your electronic credit ledger. This process is called as availing ITC. However, after availing this ITC, whenever you have an outward tax liability, whenever you make an outward supply to your customer and collect GST, you use this input tax credit to set off your outward tax liability. There is no time limit that is available for utilizing ITC. The time limit that is given in the law is only talking about the time limit for availing ITC. Now, what is the time limit? How do you compute this time limit basically? Your computation of your time limit would be a 3-step process. Normally, what's your time limit for availing ITC is what I'm going to discuss. It's a 3-step process for me. Step number 1, you look at what is the invoice date or debit note date on which you're going to take ITC. Say the invoice is like from July 2017. Okay. So I'll change it slightly because I don't want it to be affecting your amendment discussion. So let me put it as 2024 April 10. This was your invoice date. So you made a purchase on April 10, 2024. You want to take ITC of this particular purchase, okay, whatever GST you have paid. Step number 1, you looked at what is the date of your invoice. Then you look at what financial it belongs to. What financial this belongs to? It belongs to 24-25. For all the invoices or debit note belonging to 2024-25, there is a last date before which you are supposed to take the input tax credit. When I say take the input tax credit, I mean avail the input tax credit, not utilizer. Understanding this? Okay, avail the input tax credit. So 24-25 entire year, the same time limit. What is the time limit? 30th November next financial year, which means in our example would be 30th November next financial year. 30th November would be 2025 30th November. Or what is the date on which you file your annual return, that is GST R9. Actual date of filing, not the due date. They are talking about actual date of filing. Whichever is earlier, that is the last date by which you can take your ITC. Suppose you did not file your annual return by 30th of November, then maximum by the 3B that you file by 30th of November, that's when you can go ahead and then take your input tax credit. Max is only that much, not beyond that. This was the provision that we had. However, they have now moved this provision, made a retrospective amendment to relax the time limit, and then added an additional 2 subsection to give you an extended time limit. 16.5 and 16.6. What is 16.5 talks about? Now what we are going to do for another minute is that carefully we will read this chart, then I will help you to interpret the chart. I have also given you examples so that Whenever there is a question in your examination, you are able to answer this beautifully. 16 subsection 5, what it says, for invoices or debit note pertaining to following financial year, when that is for financial year from the beginning of GST introduction. When was GST introduced? 2017 July 1st. So the first financial year of GST would be 2017-18. I said for financial year at the beginning. 17-18, okay, 17-18. Second financial year would be 18-19. Third would be 19-20. Fourth would be 20-21. This for financial year, they would have had this time limit on the next year, that is 30th of November or the date of annual return. They said, government said, because it's the beginning, so much of confusion in GST, I would give you a one-time offer of extended time limit for this old period. What is it? They said, ITC can be availed using return that is filed under section 39, that they mean 3B there, filed till 30th of November 2021, which means they're talking about the last financial year in this for, which is 2021. What was the time limit for that? 30th November 2021. That time limit can be used for the first 4 years. In your examination, the chance of getting 16.5 question is rare because ICAI generally don't bother about your one-time questions. So our focus should be on 16.6. Let's read 16.6. What is that 16.6 says? Where registration is cancelled under section 29 and revoked under section 30. Cancelled under section 29 and revoked under section 30, or by appellate authority, appellate tribunal or court, and the time limit for claiming ITC under section 16.4 is not expired at the time of cancellation of registration. The new time limit for ITC on invoice or debit note will be later of 30th November next financial year or date of filing annual return, whichever is earlier, which is the normal time limit, or 30 days from the order of cancellation, whichever is later. Throughout GST, the moment you have the word cancellation, time limit will always be whichever is later. Here also you can see that they have used the time limit whichever is later. Till then all the time limit would be whichever is earlier, but the moment they're talking about an area in cancellation, they will talk about whichever is later. You will find this pattern throughout the GST. So for your examination, you should remember that the moment the question is on cancellation, the answer would be that whichever is later is what I should take. You should keep that in your head like that. Now, I hope you have read this particular provision with me. Now let me give you a context of this. We can discuss this for some time instead of overall getting you a summary. I'll give you a detailed understanding of it. They're saying that where registration is cancelled under section 29. So section 29 of CGST Act talks about cancellation. There are two types of cancellation that is mentioned under 29, 29.1 and 2. 29 talks about cancellation, and we have separated this cancellation with a name. First type of cancellation is called as voluntary cancellation. What do you mean by voluntary cancellation? The one who has obtained GST number, they themselves is going and then cancelling GST number. It's called voluntary cancellation. There is one more type of cancellation called as suo motu cancellation. In 16.6, they are talking about suo motu cancellation. What is suo motu cancellation? Registration is cancelled under section 29 and revoked under section 30. Only suo motu cancellation, the cancellation done by the officer on the registered person. Why would the officer cancel? There could be some problem with your registration. Say your registration was a fraud, or you have contravened the provision, you did not file return. There are multiple reasons that is mentioned in section 29 and the rules, where it says that your registration can be subject to cancellation. What cancellation? Suo motu cancellation. That happened. Then 270 days time, including extended time limit, is given to the registered person who got the cancellation order to apply for an additional procedure called as revocation. What is the meaning of that? The one who has got their registration cancelled can actually get their registration back. How can they get their registration back? They can get their registration back using what method? Revocation of cancellation if they have sufficient reason. Like say they did not file the return and that's why they have cancelled the registration. Now what they can do, they can file all the pending return and get it revoked. They can get their GST number back. Or they can go through the legal route. It is like appellate authority. AA is appellate authority, AT is appellate tribunal, court is High Court or Supreme Court. Through them also they can get it revoked. Now what is the point of time limit when it comes to cancellation and revocation? They are discussing a possibility that I was going to, for financial year, I am taking an old financial year, 2023-24 financial year. This 2023-24 financial year, the time limit to claim ITC would be 30th of November 2024. By 30th of November 2024, I could have taken all the credit. Any time before that, I can take the credit. That is allowed, right? What happened is, I could not take the credit on 30th of November 2024. Why? Because by July, my registration got cancelled. So, I don't have a GST number to file the return. Then after some time they applied for revocation and they got their GST number back. By the time I got my GST number back, the time limit, that is the 30th November, got expired already. So what happened? If at all my registration was not cancelled, I could have claimed some credit. Because it is cancelled and then I got it back only after the normal time limit is over, now I am in a position where it is unfair for me that I could have taken the credit if my registration was not cancelled. But now I got the GST number back, but I am not able to take ITC because my time limit is already over by the time I got my GST number back. But at the time of cancellation, was the time limit over? No. That's why I did not claim till then. In that case, government is saying that I will give you one more additional time limit. What is it? After getting the GST number back, you can take, which means after revocation order, you can take 30 days time and then claim that particular ITC for the previous period. That's why they're saying that look at the time limit like this. Later of 30th November next to financial year or date of filing annual return, whichever is earlier, or compare it with 30 days from the order of revocation of cancellation. Now let's look at an example to understand this in detail. I have given this in the notes that I have shared already with you. That notes has this entire example also with you. Look at the example here. Mr. Raju made an inward supply on 10th February 2023. The value of this inward supply is 2 lakh. GST is 24,000. Okay. There was a confusion regarding availability of ITC. Hence, Raju did not claim the input tax credit. Raju was confused whether Raju is really eligible to take the ITC or not. Okay. So, Raju did not take the ITC. What happened? What is the time limit that Raju could have taken on 10th February 2023? Same 3 step. Step number 1. What is invoice date? 10th February 2023. What is the financial year this belongs to? 22-23. What is the last date before which you can claim? 30th of November 2023. Was it over by the time they got the cancellation? No. Meanwhile, the officer, look at this. Meanwhile, the officer made a suo motu cancellation of Raju's registration. Right? And gave an order. What order? Cancellation order on 31st of August 2023, which is before the time limit at which he could have taken the credit. What Raju did after getting the cancellation, Raju applied for revocation of registration, but that he has 270 days time, 90 days by himself and 180 days with extension. So, he applied for revocation on 10th January 2024. The order of revocation came on 20th February 2024, which means the 30th November time limit is already over. But he's got his GST number back, but he could not take the ITC. Now, question number 1 that I've asked here. Find out the time limit for claiming ITC on inward supply for 10th February 2023 by Mr. Raju. What will be the time limit? So, I have to look at whether 16(6) would get in here. So, is it a case where registration was cancelled and revoked later? Yes. It is not the only reason. I have asterisk mark here given here. I need to satisfy this additional condition. What is it? Time limit for claiming ITC under 16(4), that is the normal time limit, is not expired at the time of cancellation of registration. When was the registration cancelled? on 31st of August. Was the time limit over by then? No. So I will apply what here? 16.6 will be applicable. What is the new time limit? 30th November 2023, which is the normal time limit, or 30 days from the order of revocation. When was the revocation I got? On 20th of February. From there 30 days, which is what? 22nd of March. Ignoring leap year, 8 days in February and 22 days in March. By 22nd March 2024, whichever is later. What is the later date? 22nd March 2024 would be the revised time limit for availing ITC. Is this clear to all of you? Can I have a quick yes if this understanding is clear? Right? Okay. Let's also discuss few more scenarios here wherein the time limit would be affected. Scenario number 2. Okay. Look at the screen and carefully listen and read with me. Suppose Mr. Raju has another purchase on 10th August 2023. What will be the time limit for claiming ITC? Okay, let's look at 10th August 2023. When was the cancellation came in? 31st of August. So was this purchase before cancellation? Yes. What will be the time limit? Was the time limit of ITC is already over by this time? By the time the cancellation came? No. 10th August 2023 means this belongs to 23-24. 30th of November 2024 would have been the normal time limit. That's not over by the time we got the cancellation. So again 16.6 would be applicable. By 16.6, what is the time limit I should compare? That is normal time limit, which is the next year 30th November, which is 30th November 2024, or 30 days from your revocation order. The revocation order came on 20th of February. 30 days from there is 22nd of March, whichever is later, which is the later date. 30th November 2024 would be the later date. Are you guys understanding this? Then look at the third case here. What is the third case? Mr. Raju has one more invoice from 10th January 2022 for which he has not availed ITC. What will be the time limit? There was another old invoice, but he did not take ITC yet. Can he use this provision and then take the ITC now is the question that I have. This invoice belongs to which financial year? It is 10th Jan 2022, which means it belongs to 21-22. What is the last date that is by which he can take ITC by normal route? Next year 30th November, which is 30th November 2022 would be the time limit. When was the cancellation came in? It came only by 31st of August 2023, which means by the time he got cancellation, was that normal time limit already over? Yes. If the normal time limit was already over, then he cannot apply 16.6. So I have written it here correctly. 16.6 will not be applicable as 16 for time limit, that is 30th of November 2022 is already over before the order of cancellation that came in. So his time limit would be at 16 for time limit, which is 30th of November 2024. He will not be able to take 16.6. Are you guys understanding this? Is it clear, all of you? Can I have a quick yes? Everyone, please participate and then give me a quick yes. (16.5) is not a complicated provision at all. Since Prem has asked, I am just giving you an explanation once again. 16.5 says that normal time limit is next year 30th of November, or annual return, whichever is earlier, right? For the first 4 years, they have extended this time limit till 30th of November 2021. So what will be the time limit for claiming ITC on financial year 17-18 invoices? 30th of November 2021. 18-19 invoices? 30th of November 2021. 19-20 invoices, 30th of November 2021. 20-21 invoices, 30th of November 2021. For all these years, all the invoices. So we can say all invoices from 1st July 2017 till 31st of March 2021. So from 1st July 2017 till 31st of March 2021, one time limit only will be now applicable, 30th of November 2021. So after that only we will do the normal computation of 30th November next financial year or date of filing annual return, whichever is earlier. So there's a one-time relaxation that they have given. I hope this is clear to you. There are two more clarifications that I wanted to discuss from ITC chapter. ITC on purchase of demo vehicle by dealers are not blocked. So if you look at section 17.5, blocked credit provision, you know that there is a provision called, if you are purchasing a motor vehicle meant for persons, like passenger vehicle, cars, your scooters, SUVs and all that, if it is less than or equal to 13% including driver, it's a blocked credit, right? So if you and I purchase a car in the name of a registered business, can the registered business take input tax credit on GST paid on the car? Not possible, because it is not allowed as credit. However, there's an exception that if the car is purchased by a dealer, can the dealer take input tax credit on the GST paid on the purchase of car? Yes, because he has purchased it to sell. But sometimes what happens, if you go to any of these dealers, so if you go, I've recently been to, I've seen a beautiful showroom of Tata EV. Okay, it is there in, there are only 2 showrooms, I guess, in the entire country or something like that, I understand. Okay, say, entire state of Kerala, not country, state of Kerala, only 2 showrooms are there. So Tata EV showrooms have so many demo vehicles available. They have one vehicle always rounding there in their platform. Okay, it's a beautiful, dealership center that they have created. Now, the Tata dealer has purchased a Tata vehicle to keep it as demo vehicle. Can the dealer take the input tax credit of the demo vehicle purchase? They are not selling this demo vehicle, right, at the moment. Can they take the credit? They have clarified yes, because this demo vehicle is also used for selling other vehicle. Are you guys understanding? So they have clarified ITC on purchase of demo vehicle less than 13-seater is not blocked. ITC can be availed. Clear? Then, second clarification, I have written it here. ITC is available to insurance company for GST paid on repair and maintenance services, provided invoice for the same is issued to the insurance company to the extent incurred by them. I'll explain you this. This also requires little understanding. Normally, I purchased a Honda City. Can I take ITC on the GST paid on purchase of Honda City? No, because it's a blocked credit, right? Honda City is a 5-seater, less than 13-seater if you purchase, you can't take any ITC. Similarly, on this Honda City, I have incurred some repair expenses. Say 1 lakh rupees I incurred to repair this Honda City. Can I take input tax credit on the GST paid on repair expenses? No, because 17 subsection 5 clause AB, clause A is blocking for purchase of the cars, clause AB is blocking for 3 set of services: repair and maintenance, general insurance, servicing. All of this also will be a blocked credit. There is an exception. What is that exception? An insurance company who has issued insurance on a vehicle, when they get a bill from a service center, they can take the ITC on the same. So, which means, say I am Oriental Insurance or Echo Insurance, Reliance Insurance. What is that I have done? I have sold insurance plan to people who are having car. On the insurance premium, I have collected GST. On the insurance premium, I have collected GST. What is the expense for an insurance company? Their expenses, whenever somebody is having a claim, the service center will send the bill to the insurance company. Insurance company is going to pay. If I have taken insurance, my repair of my car, I don't need to pay. The insurance company will pay. While paying this insurance company would have paid GST also on the repair expenses. The question is, can insurance company take the input tax credit on the GST paid on the repair expenses? The answer is yes, provided the service center is giving bill directly to the insurance company. Why? Sometimes what happens, I will go to a service center, I will repair the car, After repairing, I'll get the bill in my name. Then I go to the insurance company, claim this and ask the insurance company to pay the amount to me. Can insurance company take the credit in that case? No, because the service and repair and maintenance bill is given in the name of the customer, not the insurance company. So when the service center is directly giving the bill to the insurance company, in the bill, customer name should be insurance company's name and insurance company should pay for that, then only they can take the input tax credit is the clarification. I hope this is clear to you. So there is a question on the chat box that I can see. It is not relevant, he is registered or not. I don't understand whom you are mentioning as he. I'm saying that if the insurance company is getting the bill, insurance company should be having a GST number. It is not relevant whether the actual person who has claimed insurance is registered or unregistered. It is irrelevant because the bill has to be issued against the who's the supplier? The service center. They have a GST number? Yes. Who should be the customer in the bill? Insurance company should be the customer in the bill. Then insurance company can take the credit. If the customer is not an insurance company, then that person will not be able to take the credit. Only insurance companies can take the credit. If the customer is a passenger, is somebody other than insurance company, and still insurance company is reimbursing this, then also they cannot take the credit. That is your understanding. See, next amendment, I don't think they'll ask this question in full relating to metal scrap, but it is always better to have overall understanding about metal scrap before if you are understanding metal scrap amendments in full, it will create some kind of a confidence in you. Otherwise, in your syllabus, it is tested here and there, in small areas they are testing metal scrap. So there are multiple amendments that has come with metal scrap, and I am going to give you an overall understanding of all of them. Now, metal scrap industry, GST Council believe that metal scrap, they are evading a lot of taxes. One reason, it might not be even a metal scrap, so people might sell actual item by quoting it as metal scrap. That is one problem that they have. Second, the entire industry is unorganized. The people who are not paying any taxes on the purchase and sale of metal scrap. So what they have done? They have tried to catch the entire industry in full. So there are some cases metal scrap would be taxable under RCM, some cases under FCM, some cases TDS is applicable, so it's a little bit complicated. So what I've done, I've created a summary for you. So we'll read the summary, we'll try to have understanding. Please remember, whenever you have a chart, you should ensure that after you read the chart, after listening to my explanation, you go and then scribble those answers in your chart. Like say, if you're watching this on YouTube, probably after writing this chart, wherever you wanted to additionally make an understanding, you make that extra understanding in your notes, in your words. So your understanding would be better. If any question comes in, you will have it, because the chart is not going to open up everything for you, right? So you need, after this chart, you need my explanation on top of it. I said if the metal scrap supplier is registered, which means I have a GST number, I am supplying metal scrap. To whom I can supply? Another registered person, or I am selling it to an unregistered person. If I am selling to an unregistered person, I will collect GST, I will pay FCM, normal provision. If I am supplying, if I am giving metal scrap to another GST registered person, government says that even after collecting GST from another fellow, this metal scrap guy might not be depositing this GST correctly. So what they have done, they introduced TDS as a provision for the recipient who is registered and receiving metal scrap from another registered person. Okay, carefully listen to me here. Supplier is having a GST number. What is that they are supplying? Metal scrap. Say I am a supplier, I am a sole proprietor, I have a GST number, I am supplying metal scrap. One customer came for metal scrap, he does not have GST number. So what will I do? I will give the bill, collect GST under FCM, normal thing, I will pay GST. If the customer is registered also, I will collect and I will pay. But the customer is not going to pay me full. I sold him metal scrap of say 1 lakh rupees. Say metal scrap is subject to GST at 12%. How much money will be paid? In the bill I have given 1 lakh metal scrap, GST at 12%, 12,000. So my total amount payable to me When I'm supplying to another registered person, metal scrap would be how much? 1,12,000. How much will be paid by this metal scrap consumer or purchaser who has a GST number to the supplier who has a GST number? He will only pay me 1,10,000. How much was there in the bill? 1,12,000. Where did this 2,000 go? He has deposited it directly into my GST number as tax deducted at source. So the section 51 TDS provision will be applicable to a recipient of metal scrap is an amendment that we have. So what happens? I will collect 1,10,000 from him. 2,000 will directly come to my electronic cash ledger. This is the provision. So government gets this information of 1 lakh and my liability of 12,000 through the GSTR 7 return submitted by the recipient. Then, what if this metal scrap supplier is unregistered? Then I have to ask the question, is the one who is buying the metal scrap? There could be a lot of people like, in the household, there could be metal scrap. We would be selling this metal scrap to somebody who's having GST number, right? People could come to get the scrap from our houses, right? We could be selling them metal. Then the question is the one who's purchasing metal scrap from our houses, do they have GST number? If they have GST number, they will pay tax under RCM. That's what I have written in this unregistered person selling metal scrap case. But what if both of them are unregistered? The one who's coming to our houses to get the metal scrap is also not having GST number. We are also not having GST number. Then there is no way that the government can collect GST. So GST will not be payable. That's what I have written here. Are you guys understanding this? But if you are an unregistered person who's supplying metal scrap, no, you will have to, and your recipient is registered. Once your turnover increases and then reaches the turnover limit, you will have to go ahead and then take a registration. Then you will come under the registered part. Okay. So if you're an unregistered part, you will come under this. If you're registered, you will come under the first branch. Is it clear to all of you? I need a little more yes from you on the chat box before I move to the next. Okay. Let's move to the next amendment, which is a very small amendment. If you look at the amendment and amendment alone and then discuss, it's just a change in the tax rate that is applicable on TCS. This is section GST which is called tax collected at source under section 52, which is applicable to electronic commerce operator like your Amazon, Flipkart, who are supplying third party product through their platform and collecting consideration. So such persons used to, like say an Amazon or Flipkart kind of a platform, generally will not pay entire GST that is collected from the customer to the sellers who are selling through their platform. They used to deposit 1% of their net value of taxable supply directly as TCS to the GST department against the original supplier in their platform. Like Amazon has lakhs and lakhs of supplier, they will not get the entire GST as customers you and I pay. The TCS will be collected by Amazon and then deposited at 1%. This 1% rate now got reduced. For your examination, you will learn it as 0.5%. Rest everything remains the same. TCS tax rate is now reduced to 0.5%. You learn every provision as same and only the tax rate is now reduced. If the value of net value of taxable supply by one supplier through Amazon is 1 lakh, right? 1% of 1 lakh would be 1,000 rupees. Now they don't need to, Amazon will not deduct 1,000 rupees, they will deduct only, or they will collect only how much and then deposit only 0.5%, which will be 500 rupees, right? Rest everything will be paid to the original supplier. Then the provision remains the same. This 500 will be deposited by Amazon in the name of the original supplier. Very simple. Look at the next amendment. This comes from payment chapter. See, with respect to this amendment, I have made an approach like I have done for the initial amendment discussion, wherein I have consolidated the entire discussion and then I'm giving you the overall understanding. Reason being, if you understand only the amendment, it might not make any sense, it might not be useful for your exam. So I am consolidating the entire interest scenario here. Now, in payment chapter, we have an area called section 50 where we are talking about what if I don't pay the GST on time to the government. Normally, I am supposed to pay the GST as on the due date of my GSTR 3B. In a monthly filer case, it will be 20th of next month. So on or before 20th of next month, I am supposed to deposit all the GST that I have collected to the government, right? Suppose I don't do that. For every day of delay in depositing the taxes, I am supposed to pay interest to the government apart from the taxes. First question is, how much is the interest rate? From there, our discussion starts. There are some additional logical understanding that the government has come up with, which is good for the industry. So we will try to understand that. As usual, we are going to go through the chart, get some kind of an understanding, then look at a question example. They have already tested interest in the previous examination. So either for May exam or September exam, you can expect the interest part coming back again, or in a main question like a full length question, they will give it as a sub question or a case study sub question. They will definitely ask one of these areas. Now let's look at interest on delayed payment of GST. There's a section called 50 subsection 1. That's what I'm talking about. There's another 50 subsection 3, interest when you have wrongly availed and utilized ITC, wherein the interest rate could be as high as 24%. That's a separate discussion that you need to have separate, that was an amendment in the previous attempt. So that's something that you discuss separately and then go through. I'm talking about 51 this case. What is the rate of interest when you delay in payment of GST as you compute on a monthly basis to the government? Not the case where you have wrongly taken ITC and then reversed it. I'm talking about you had a liability but you delayed it. It is 18% per annum. Annual interest of 18% is what you will add apart from taxes while you make delayed payment of taxes. Then the first question I have is this tax amount, okay, you have to pay 18% on the tax amount. When you say tax amount for a month, is the tax amount gross GST liability, that is outward tax liability, or net GST liability? Say I will take the last month, which is March. Say in March 2025, I have an outward tax liability of 1 lakh, ITC of 50,000, net GST payable of 50,000. I am supposed to pay this by 20th of April. I delayed it to 25th, so 5 days of delay. I have to pay interest. Should I pay interest on 1 lakh, which is my outward tax liability, or the net GST liability, which is after reducing the ITC? To give you this answer, you need to ask another question additionally. What is that question? Is GSTR 3B for the month or quarter is filed on or before the due date? Suppose you have not filed your 3B at all for March. You filed your 3B by 25th of April only, which means 5 days of delay in filing 3B, paying the entire GST. Then you will pay interest only on net GST liability. That's a very clear understanding. What do you mean by net GST liability? You will pay interest only on the amount that you pay by using what ledger? Electronic cash ledger. However, if the GSTR 3B for the month of quarter is filed on or before the due date is yes, you filed 3B on time, but you missed out to declare something in that 3B. Then when you declare this later, you will end up paying interest on the gross GST liability. Now let me read it once again for you. So the first question is what? Whether I should pay interest on gross GST liability, net GST liability. The next question you should ask is what? Did you file GSTR 3B for the month or the quarter before the due date? The answer is no. Interest is payable on net GST liability. What is net GST liability? GST liability paid by debiting electronic cash ledger. What is the duration of interest? From the due date of return till the actual date of return or payment. If you have filed 3B on time, but you have missed out, if the answer is yes, then you read the second part, which is if there is a subsequent declaration of invoice you missed out or liability, interest is payable on gross GST liability. What is the duration of interest? From due date of that payment. So what date you should have declared and then paid this? to the actual date of payment. This is the basic understanding which is tested already in the examination. It's not an amendment. Now, what is the amendment on top of this? They said, what if I did not file my 3B and then set off, but I already had money in my electronic cash ledger itself. On 20th of next month, on 20th of April, I deposited 50,000. How much was my outward tax liability in the example I gave you? 1 lakh. 50,000 was my ITC. Net GST payable by cash was 50,000. I have not filed 3B, but 50,000 was deposited from 20th till 25th in my electronic cash ledger already. Then government has no losses because the money is already there with the government only, but I did not file my 3B. Then they said, what is amendment? Any amount credited in electronic cash ledger from what date to what date on or before the due date of 3B, that is 20th of February, remains in that ledger till the date of filing return after the due date. After the due date in the sense you are filing it on 25th of April. So from 20th till 25th, you had an amount of 50,000 already in my cash ledger. That can be reduced from or excluded from the tax amount on which you are supposed to pay interest, because that amount is already there with the government is what they are saying. That's your amendment. You don't need to pay on the entire amount, you can reduce it. So I have given you an example because it's a computational area. So I want to give you an example here. Look at it. Mr. Raju in Jan 2025 had an OTL. What is OTL? Outward tax liability of 1,80,000. Had an input tax credit of 80,000. How much is the net GST payable by cash? It is 1 lakh rupees. Jan 2025, 1 lakh of net GST by cash should have been paid on or before 20th of February 2025. But he did not do that. What he has done, what is the due date? 20th of February. 19th of February, he created challan on 19th February for 1 lakh. Did not file 3B, but deposited this 1 lakh into the cash ledger. So from 19th February onwards, his cash ledger has how much amount? 1 lakh. However, 3B was filed only on 28th of February. How many days of delay is there? 8 days of delay. So after the due date, balance in electronic cash ledger got set off to net GST payable, which means on what amount he will have to pay interest? Net GST payable by cash, which is 1 lakh, minus the amount that was lying in his electronic cash ledger, 1 lakh. So he will not have to pay any interest. But what is that he will have to pay? He will have to pay late fee for delayed filing of GST at 3B, 50 per day. Then assume only 50,000 was deposited and remained in cash ledger. How much was not deposited? 1 lakh was not deposited in cash ledger, only 50,000. Then on what amount you will end up paying interest? Only on 1 lakh is the net GST liability minus 50,000 already lying in the cash ledger. That is 50,000 will be the tax amount that I have to pay interest on. So 50,000 into 18% into 8 divided by 365. 197.26 rupees would be the interest computation. That's the additional amendment in interest computation that we have now. Please note, late fee will also be additionally applicable here. So if they ask a question like this, no, they can touch upon late fee also. Late fee of rupees 50 per day will be applicable for delayed filing of a return for 8 days. That will be additional 400 rupees that you have to pay. That is different from interest. Is this clear to all of you? Can I have a quick yes on the chat box if this is clear? All right. Now look at the next chapter which is returns. There are two amendments that I wanted to discuss in return chapter. And the first one is a very small amendment which is on GSTR 1. So there was few years back, not couple of years, 2021 or 22, they had asked a question on what kind of information will be submitted in GSTR 1. Based on multiple invoices, they have asked you whether it will be invoice-wise information, consolidated information, how they will submit. So I have given you, there is an amendment that we have there, how they submit information in GSTR 1. That's something that you have to learn for this examination. So I have given that also for you to understand. GSTR 1 is nothing but a return on outward supply. Normally, you file this return on or before 11th of subsequent month. This return is the one which is used for the recipient to reflect that particular invoice in their GSTR 2B, and that's how they take the credit. So this return is being used by government to understand what are the invoice wise outward supply made by everyone in India. What kind of information needs to be submitted in their GSTR 1? It's very simple to understand that for GSTR 1 purpose, we have to classify the invoices of your outward supply, because GSTR 1 is a return on outward supply. You need to classify your outward supply into B2B supply and B2C supply. What is B2B supply? It is business to business supply. B2C supply is business to customer supply. In GST, B2B means registered person to registered person. B2C means unregistered customer supplies are called as B2C supply. So in GST, if the recipient is registered, they are going to take ITC. So the government has said that if your outward supply is B2B or to a registered person, invoice wise details are to be submitted, whether it is intra or inter. If it is unregistered customer, I have to again ask another question. Is it an intrastate supply or an interstate supply? If it is an intrastate supply, rate-wise consolidated information of outward supply needs to be submitted. However, if it is an interstate supply, again I have to ask one more question. Is it B2C large or B2C small? This is where we have an amendment. Earlier, we used to call something as B2C large if the value exceeds 2,50,000 on a specific invoice. However, that is now amended. They said if there is an invoice having a value more than 1 lakh with effect from 1st August 2024, which means it's applicable from your May exam onwards, you need to give invoice wise details to the government. What supply? Interstate supply, B2C, interstate supply, value more than, not exact 1 lakh, 1 lakh would be called as C, B2C small, more than 1 lakh would have to be invoice wise reported to the government. If it is B2C supply and it is interstate, but it's less than or equal to 1 lakh, they don't need to give invoice wise details to the government. Consolidated state wise, rate wise information only needs to be reported. Say if I'm from Chennai and I supply to Bangalore and it is only 10,000, 20,000, 30,000 and it is all at 18%, I can consolidate the total amount and then report. But if I supply 2 lakh to Bangalore, interstate, B2C, unregistered customer, still I will have to report it invoice wise. This is your amendment that you have. That amount is changed from 2,50,000 to 1 lakh. Your last set of amendment for my discussion today would be GSTR 1A. I highly predict that there will be a question on theory on GSTR 1A. It's very simple to ask, right? 5-mark question on what is GSTR 1A. Write a short note on GSTR 1A. That is a very common structure. Like, see, there is features and all that is given in your book. So there's a very high likely chance that they might come up and then ask you a theory question. So if you're somebody who is writing May exam, I'll strongly recommend get a mental image of this entire chart and you will thank me later, right? So let's go ahead and then discuss what is GSTR 1 capital A. It's a new return that is introduced in GST. Why did they introduce a new return in GST is because of a rule called 88. There's a rule called 88C and 88D. So you need to connect and then understand these two things. So what I'll do is that I will first take you through this GSTR 1A, tell you the features, what is this, and then tell you why they have come up with this. Let's look at GSTR 1A, what I have written. GSTR 1A is nothing but an amendment option that is available for GSTR 1. So this return can be used by somebody after the GSTR 1 due date, right? You still want to declare something in GSTR 1, you can use GSTR 1A, which means that you want to declare additional invoices after, say you missed out to declare something, you wrongly reported something. You can use your GSTR 1A before you file your GSTR 3B, so that whatever outward tax liability you declare in your GSTR 3B will tally with whatever you have declared in 1 or 1A. There are a lot of cases government has seen wherein GSTR1 has an amount which is not tallying with GSTR3B. What happens? Government is now sending a notice to these people who are declaring more amount in GSTR1 compared to what is there in GSTR3B. And this particular notice under 88D needs to be replied within 7 days, otherwise they will take this particular case for recovery and all that. They might send you a notice and things like that. So to avoid this scenario, there are a lot of cases where people might make a genuine mistake. I forgot 10 in my GSTR1 while uploading an invoice, but in 3B I have given the correct value. No, there is no option, you will get a notice, because you're getting a 3B after GSTR1, which is on 11th of next month, till 3B of 20th. There are 9 days, I could have still done something, but there is no revision of return that is allowed under GST. To avoid this revision of return, they have come up with a amendment return called as GSTR1 capital A. So let's read word by word here. GSTR1A is a return for declaring additional particulars or amending the particulars already declared except GSTIN. You cannot change the GST number of your customer while filing your GSTR1A. That can only be done using another return. But all other details like the value, the CHSN code, or invoice number, all of this can be changed. For declaring additional particulars or amending a particular already declared, you can even declare additional invoices. Okay, you can use GSTR1A. From what date to what date you can use this GSTR1A? What is a from date? Carefully listen to me here. After the date of filing GSTR1 for the month. What is the due date? 11th of next month. If you are a monthly filing person. If you are somebody who is doing quarterly filing, your due date is 13th of next month from the end of the quarter. So if you are somebody who is under QRMP, quarterly return monthly payment, for first quarter in a financial year, April, May, June, put together you will only file one GSTR1. From 1st April till 30th of June, for 3 months you will file one GSTR1, which you will file on or before 13th of July. So after 13th of July. Or due date of filing GSTR1 for the month or quarter. Say I filed my GSTR1 only on 15th. Can I file GSTR1A by 12th after 11th? My due date is what? 11th. So they said the due date or the actual date of filing, whichever is later. So you filed it on 5th itself, still 11th. You filed it on 15th, then only 15th, whichever is later. After your GSTR1 is over and the deadline is also over, whichever is later, right? From there till you actually file your 3B, not due date. Before you file your 3B, till that date, you can go ahead and then do what? GSTR1A. After filing 3B, you cannot do that. Why are you doing it? To ensure that your outward supply reported in GSTR1 or 1A through at least amended through 1A tallies with GSTR3B outward supply, so that they don't have to send you a notice. What are the features that is available? Number 1, optional facility for current tax period only. Okay, so you cannot do it for a previous tax period. It needs to be done for current tax period only, which means that only previous month I will be able to do that. For a old month, you will not be able to do that. What is the benefit? Look at the second point. GSTR3B liability gets updated based on the same. So after your GSTR1 with GSTR1A, you can actually update your liability so that it matches. It will be reflected in GSTR2B of the recipient. Whatever invoice you did not do by GSTR1, if you upload it by GSTR1A, it will be reflected in the GSTR2B of the recipient, but not in the same month, next month only. Okay. Since filed after GSTR1 due date, it will not be same month, next month, because GSTR2B of the same month will be reflecting only the invoices you updated in GSTR1. 1A, next month it will get reflected. In QRMP, invoice in IFF can also be updated. However, only using quarterly GSTR1A. Say instead of uploading the initial month GSTR1, in QRMP, April, May, June, you will have one GSTR1, right? For the first month, April, and second month, May, you can even upload your invoices in GSTR 1 using a facility called as IFF, Invoice Furnishing Facility. Whatever invoices you have uploaded in Invoicing Furnishing Facility can also be updated by using quarterly GSTR 1 capital A. After GSTR 1, you can go ahead and then update it by 1A, something that you have uploaded by GSTR 1 or IFF in QRMP. GSTIN cannot be updated using GSTR 1A. It can be amended only using subsequent GSTR 1. You cannot use GSTR 1A to change the GST number of customer, which means I sold to Mr. Raju. I have given Mr. Raju's GST number in my GSTR 1. By using 1A, I cannot change the GST number of Raju. Can only be done by amendment option in the next GSTR 1. These are the features that you have. So get a mental image of this GSTR 1, highly likely to be tested in your examination. Right? Okay. So these are the major amendments that we have from our examination for your May examination. These are the major amendments that you have to look at. So I will give you a quick update of what is there and then give you few closing tips so that you can go ahead and then prepare well again. So number 1, you have commercial property in charge chapter, GSTR 4 deadline changed. You have exemptions, clarifications and additional exemption introduced. You have ITC 16.6 which is going to be tested in your exam, very important amendment. Then we had discussed about clarifications on block to credit on demo vehicles and insurance. Metal scrap, I have given you a summary to understand that in detail. TCS rate is reduced, and interest on delayed payment, there is a reduction that will be available based on how much money that was lying in your electronic cash ledger. Then we discussed about GSTR 1, B2C large invoice definition is changed, and I have also discussed you about GSTR 1A and additional return that is there. So these things are very, very important for your May exam. I hope you will go through our notes the day before the examination so that you get full clarity of this. Any question that you would find, including your RTP and MTPs, ensure that you work out those questions so that your understanding on understanding on your amendments would be very strong. Our examples are also going to be very helpful for you. So what I'm doing in my YouTube channel is that I'm hope that some of you would already be a subscriber to that YouTube channel, so you would have already seen this. So every day I'm uploading a revision lecture. So today I have uploaded on composition levy scheme. Yesterday I have done it for value of supply. Tomorrow it will be for charge. Tomorrow I will have 2 videos because I will also upload this into my YouTube channel. Probably Ernakulam Sikasa would also upload in their channel. I'm not very sure about how they're going to do that generally, but at the closing remark they can talk about it. And I strongly recommend, if you need your a quick summary of the chapters, you would refer that, right? So that's it from my side. I hope you have enjoyed the amendments and got clarity on the same, and I hope that this will be helpful for the examination, and then you will continue studying with all the rigor that you have for the day and the days to come. Thank you so much for your patient listening.